In this video, I will be showing you the Heikin Ashi strategy that you need to combine together with the super trend strategy for your day trading or for your scalping or for your swing trading. So in order to understand this strategy and in order to become profitable using it, you need to understand something very basic and very important. So you need to pay attention to whatever I am going to explain in this video. So in order to use the Heikin Ashi and the super trend strategy together and combine them, you need to understand what is referred to as a break of structure. A break of structure, BOS, as some people will refer to, is simply showing you that a trend is going to continue. So the Heikin Ashi and the super trend strategy, they are trend following strategies. So you can't use them without identifying a trend in a market, and that is what I want to show you first. So before you even apply it to your chart, you need to also identify your trend. And I will show you how to identify the trend, and I am going to show you the bar replay mode of how you can apply the strategy correctly. So without wasting any time, simply go to your chart and shrink it. Whatever time frame that you are using, I am on the 15 minutes time frame. So for the 15 minutes, I will use it and shrink my chart in order to identify the trend. So identifying a trend is very easy. So for an uptrend, you are looking for price forming a high, then you have a pullback, then you have another high created, then you have a pullback. You need to see this thing happening twice, and you are going to take your entry on the third one. Don't miss that third move. It's very important. It's the third move, because for you to even identify it that okay, a trend is happening, you need it to happen two times. So we have one high here and the second high. So you are taking your entry somewhere here so that you will form the third high. That is what we are going to do, and we want to identify this trend by looking for a break of structure here whenever price retraces down and it pushes up to cause a break of structure. This is when you will know that a trend is going to continue. So when you see a break of structure, you will know a trend is going to continue. That's the first move, and then we now have another break of structure happening at the top. So when you have another break of structure, whenever price moves again to come and cause a break of structure, whenever it passes this previous high to cause another break of structure, when you see them happening two times, you have known that okay, a trend has been established. So you are going to wait for the retracement and you will take your entry here. So this is when the Heikin Ashi and the super trend strategy are going to help you to take this entry. But we would first need to identify that these two break of structures, you must identify them on your chart. Then you take your entry with your Heikin Ashi and the super trend indicators. You will take them after the pullback has occurred. Whenever you take your entry, you're anticipating to move to cause another break of structure around here. That is the third move that you are waiting for. So you are waiting, you are the one that you are taking your entry so that you will cause the third break of structure. After the third break of structure, I cannot guarantee for you whether the trend will continue like that or not. So the important thing is for you to note the first one, the second one, and then you take your entry on the third. You may ask that, can't I take the entry on the second? It's risky because you don't even know if it is an actual trend that is happening. So the second one must occur for you to know that it is a trend that is happening. So in order not to waste your time, let me just show you what just happened here on the chart. You can see from this move here, if you see a move happening, first one, there's a pullback, then you have another second one here, then we have a pullback. This is what I am talking about. So the first break of structure occurred here. We have our first break of structure here. Then we won't know if this trend is going to continue when you see it up, because it may pull back downwards. So we need this second one, this second break of structure to occur again for us. So price must pull back and then go up to clear this previous high. Then you now know the second one has been established. So you need to wait for the pullback. So you waiting for the pullback is waiting for this to occur. Once the second one has happened, you are waiting for this to take your entry, and it is here that your Heikin Ashi and the super trend strategy is going to be applied. If you have understood this market structure or the break of structure to show you that a trend is going to continue, then you can catch this move, the third one that is about to happen. I am going to show you this in the bar replay mode. So if I were you now, even from this point, you can say there is a break of structure here. So we have a break of structure to the downside. This is how you identify. So if we can have another one that will occur, any break of structure that will occur around here, this forms the second one for us. This is the second break of structure. So we will wait. If this occurs, then we will wait for the third one. So let's play it and see what will happen. So now we have another break of structure. The second one has occurred now as price has broken to the downside. So we are going to wait for price to pull back inside this second break of structure, and we will apply our Heikin Ashi and super trend indicators, and you will see how it occurs and how to use it. You see, price is inside now. So this is where I am going to show you how to apply the Heikin Ashi charts. So in your trading view, you are going to go over to this symbol of your candles, click on it, and you are going to go to the Heikin Ashi Candles, and you are going to click on it so as to change their look. If price is pushing upwards, you will see that they don't have wicks at the bottom, and if price is pushing downwards, they don't have wicks at the top. So that is how you see the Heikin Ashi candles. What we need to do is to add our super trend indicator. So I am going to click on the indicators, and you are going to type super trend, and you see it here. We need two of them. So I'm going to add one, and I'm going to add the second one by clicking 2 times. They have been added. We need to edit the settings of the super trend indicators. So we are going to click on settings, and under the length, I am going to change it to 21, and the factor, I am going to change it to 1, and you click on OK. That's for the first one. And for the second one, I am going to click the settings again, and I'm going to change it to 14. Why? Because we need, and I'm going to change a factor to 2. We need them to pick our signals earlier. So I'm going to click on OK. We now have our super trend indicator added to the Heikin Ashi charts. So since the second break of structure has occurred, and we are now seeing that price is pushing backwards, our super trend indicators have been added. We have edited the settings, and we have changed our candles to the Heikin Ashi. So I am going to tell you when to take your entry. Since we have this break of structures occurring below, it means we are in a downtrend. So we are only going to be looking for sales. We will not be buying. We will be looking for shorts to take. So I am going to enlarge these candles for you. You can see how the candles are. So we are going to wait for the candles to have double bearish signals on the super trend. So you will need the same color happening on the super trend indicators. So the two super trend indicators must have the same colors, and since we are in a downtrend, we need to take entries only when we see these bearish moves occurring. Since price has retraced inside of our second break of structure, so we need something that played out like this to also happen around here. Currently it is buying by retracing, so we need to join the trend anytime that we see something occurring like this. So we will also see that the candles will be pointing downwards with their wicks. So the shadows or the wicks of the candles, the Heikin Ashi candles, will be pointing downwards. They will not have wicks at the tops. So the same thing that you see occurring here, that the Heikin Ashi is telling you to sell when two of these candles are occurring, and we are seeing that the two super trend indicators are bearish, that is when we are going to take our sales. And when that happens, we take our sales. Our stop loss will just be above any high that was recently created. So let us see. Now we need these Heikin Ashi candles to be long, not tiny candles like this. We need them to be long. So when we see those bearish candles, long bearish candles forming, that is when we will take our sales. So let us play and see what will happen. So this is what we are looking for. When you see this happening, long bearish candles that have no wicks at the top occurring, we have our two super trend indicators pointing downward. They are bearish and they are all of the same color. We are going to take our entry here and we will aim for 1 to 2. Our stop loss is going to be above here, and we will aim to clear this particular low that was created, or we'll aim for 1 to 2. Now remember, it is a trend, so we will aim that the trend should continue. That is just what we are looking for. So I'm going to play it fast now for us to see what's going on. And you can see now that price has given us our 1 to 2. It has given us our 1 to 2. Now this always happens. If you have the ability to identify your break of structure, this is the first break of structure that we see. This is the first break of structure. This is our second break of structure. So our entry is to give us our third break of structure, and the Heikin Ashi will help you to identify those particular points at which you will take your entry. Very long candles forming, look at them. Once you see them forming 1 2 3 4, they are forming like that, we are going to take our entry at this, and our stop loss will just be above any high or low that was formed. For this, it is a high that was formed because we are in a downtrend. And you can apply this to your scalping with the 5 minutes time frame. Identify your trend on 1 hour or on 30 minutes, and you take your entries on 5 minutes for scalping. Or you can use it for swing trading. Just identify your trend on the daily time frame and you use your 1 hour to take your entries. Bye bye.